Imagine waking up one morning to discover that the money you've used your entire life is no longer the money people trust. Your dollar is no longer the default. Banks aren't the center of the financial universe. Governments aren't the only issuers of currency anymore. Instead, a mysterious digital asset born from a 9-page document uploaded to an obscure mailing list has become the new foundation of global finance. How did that happen? How did something with no physical form, no government, no central bank, and no single owner become a trillion-dollar force shaking the modern financial world? Today on Financial History, we're going to unravel one of the most remarkable economic stories of the 21st century. The history of Bitcoin, how it began, how it grew, why it matters, and what its rise tells us about the future of money. Because whether you own Bitcoin, doubt Bitcoin, or don't think about it at all, the forces behind it are reshaping finance in ways no one can ignore.
The world before Bitcoin. To understand Bitcoin, we have to understand the world that created it. Go back to the early 2000s. The global financial system was massive, interconnected, and, at least on the surface, stable. Banks were powerful. Governments controlled money supply. Central banks acted as the guardians of the economy. But underneath that stability, cracks were forming. Housing prices were being inflated by reckless lending. Banks were packaging risky mortgages into safe investments. Regulators weren't watching closely enough. And everyday people had no idea how fragile everything was. Then came 2008, the year the world learned that the financial system could fall apart in a single season. Banks collapsed. Millions lost their homes. Governments printed trillions to rescue the system. Trust evaporated. People around the world started asking the same question. If the institutions controlling money can fail this badly, is there a better way? While that question echoed across the global economy, something quietly appeared online that would eventually answer it.
On October 31, 2008, just weeks after the collapse of Lehman Brothers, a message appeared on a cryptography mailing list. It was from a user named Satoshi Nakamoto, and it included a document titled Bitcoin, a peer-to-peer electronic cash system. No one knew who Satoshi was. No photo, no company, no government. Just an idea. But inside that 9-page white paper was a radical proposal, a new kind of money, created without banks, verified by mathematics, secured by cryptography, and maintained not by a government, but by a network of people around the world. Instead of a central authority deciding what's true, Bitcoin would rely on a blockchain, a public ledger of transactions, permanently recorded, impossible to alter, and visible to everyone. It was a trustless system, designed because trust in traditional finance had been lost. But at that moment, no one knew this idea would change the world. It wasn't until January 3, 2009, when Satoshi mined the first block, the Genesis block, that Bitcoin officially came to life. Inside it, he embedded a message. The Times, 03/January 2009, Chancellor on brink of second bailout for banks. It wasn't just a timestamp. It was a statement. Bitcoin was born as a response to a financial system people felt had betrayed them.
The early days, a currency with no value. In the beginning, Bitcoin wasn't worth a penny, literally. It traded for $0. It had no market. Most people saw it as a hobby project. Some saw it as a protest, and others dismissed it as internet money for nerds. Mining was easy. Anyone with a laptop could earn thousands of Bitcoins in days. But gradually,
The idea started spreading. People began trading Bitcoins online. Forums popped up. Early adopters debated how it should work. Developers improved the software. Then, in 2010, came a legendary moment. A programmer in Florida named Laszlo Hainix posted an offer. He wanted to buy 2 pizzas. He didn't want to pay with dollars. He instead offered 10,000 Bitcoin. Someone accepted. Those 2 pizzas became the first real-world purchase with Bitcoin. Today, those 10,000 Bitcoin would be worth hundreds of millions of dollars. Bitcoin had taken its first step into the real economy.
The first exchanges. Bitcoin enters the market. Once Bitcoin proved it could be traded for real goods, the next step was creating places to buy and sell it. In the early 2010s, simple and unreliable exchanges began to appear, and one of them would become infamous, MTGOX. Originally built to trade online game cards, MTGOX was turned into a Bitcoin exchange and quickly became the world's largest, handling about 70% of all Bitcoin transactions. But it grew too fast. Security was weak, management was overwhelmed, and behind the scenes, hackers were quietly draining massive amounts of Bitcoin. In 2014, MTGOX collapsed, losing over 850,000 BTC. Many believed this was the end of Bitcoin, but the opposite happened. The failure pushed the ecosystem to grow stronger. New, safer exchanges emerged. Regulators took notice, and the Bitcoin community became even more determined. MTGOX didn't kill Bitcoin, it forced Bitcoin to evolve.
The price surge, from pennies to thousands. Bitcoin rose slowly at first, $1, $10, $100. Then, in 2013, it skyrocketed past $1,000 for the first time. The media took notice. Investors got curious. People started asking if this could be the future of money. Governments debated it. Banks watched carefully. Tech founders saw opportunity. Then the price crashed over 80%. To some, it looked like a bubble. But zoom out, and a pattern appears. Huge surges, big crashes, and even bigger surges after. By 2017, almost $20,000, then a crash. By 2021, $69,000, then another crash. But each cycle added more users, more investors, more companies, and more institutional interest. Each rise and fall pushed Bitcoin closer to the mainstream. Why Bitcoin grew. The forces behind the movement. Bitcoin didn't rise by accident. Its growth was driven by major global forces. Force number 1 was distrust in traditional finance. Since 2008, crises, inflation, and bank failures pushed millions to question traditional money. Bitcoin, decentralized and transparent, offered an alternative. Force number 2 was technology enabled it. Smartphones, fast internet, and global connectivity made digital assets accessible to billions. Bitcoin became not just money, but a tech revolution. Force number 3, a new generation of investors. Millennials and Gen Z, raised during economic uncertainty, embraced digital assets instead of fearing them. Force number 4 was institutional adoption. The unexpected happened. Wall Street joined in. Hedge funds, corporations, payment companies, and even governments began holding Bitcoin. ETFs launched. Public companies added BTC to their balance sheets. Banks built crypto products. Bitcoin did the impossible, entering the mainstream financial system while still operating outside it.
Bitcoin is not just a technological project. It is not just a financial asset. It is a philosophy, a belief that money should not be controlled by a single authority. No government should have the power to print unlimited currency. People should have financial freedom without permission. Value should be based on transparent rules, not political decisions. Whether you agree with this philosophy or not, it has inspired millions around the world, and it has shifted the global conversation about money. Governments are now exploring digital currencies. Banks are rethinking how payments should work. People are learning the difference between inflationary and deflationary money. And investors are rethinking what value means. Bitcoin didn't just introduce a new currency, it challenged the definition of currency itself.
As Bitcoin grew, governments began responding. Some embraced it. Japan recognized Bitcoin as legal tender. El Salvador made it official currency. Some resisted it. China banned exchanges and mining. Many countries created strict regulations. Others tried to compete. Central banks began designing CBDCs, digital versions of national currencies, to modernize financial systems. Every reaction, whether supportive or restrictive, proved one thing: Bitcoin mattered. You don't build laws around something irrelevant. You don't regulate something insignificant. Bitcoin forced institutions to change.
One of the most fascinating parts of Bitcoin's history is its founder. Satoshi Nakamoto disappeared in 2010. No public appearances, no interviews, no claims to fame, no request for recognition. He left behind a system that could operate without him. And he vanished. Satoshi's disappearance is a big reason Bitcoin succeeded. There's no CEO to pressure, no founder to bribe, no company to shut down, no single point of failure. Bitcoin is not a corporation. Bitcoin is not a government program. Bitcoin is not controlled by a billionaire. Bitcoin is a protocol, owned by no one, used by everyone. In the story of money, that has never happened before. The future of Bitcoin. What comes next? We're still in the early chapters of Bitcoin's story, and its future could unfold in many ways. Scenario 1. Digital gold. Bitcoin becomes a global store of value held by people, institutions, and even nations. Scenario 2. A global reserve asset. Not replacing currencies, but sitting alongside them as a universal financial anchor. Scenario 3. It fades away. Regulation, technology issues, or competition could weaken Bitcoin's influence. Scenario 4. Everyday finance. Bitcoin becomes part of payments, savings, and international transfers. No one knows which path will win. But one thing is certain: Bitcoin has already changed the world, changing how we see money, trust, and value, and proving that a financial system can be built from the ground up by the people.
The core lesson of Bitcoin's history. The real lesson of Bitcoin isn't just price, tech, or early investors getting rich. It's this: Bitcoin was created when trust in the system collapsed and people chose to rebuild money themselves. Every major shift in money came from crisis: the gold standard from political chaos, paper money from expanding trade, central banks from instability, and Bitcoin from the 2008 crash.
History shows money evolves when society demands change. Bitcoin was that demand. The blockchain was the invention. And the story is still being written.
If you enjoyed this deep dive into the history of Bitcoin and want more stories that uncover the hidden forces shaping our financial world, make sure you like this video. Comment below, do you think Bitcoin will become the future of money? Subscribe to Financial History and check out our other videos for more powerful stories from the past that shape our financial future. Thanks for watching. This is Financial History, and I'll see you in the next episode.